What does it mean when you see Target shooting up 20% or Lowe's gaining 10% in a session? How could Nvidia tack on another 3 points after rallying relentlessly last week? Did something change? Did the economy magically shift into overdrive? No, not at all. These stocks would have gone up no matter what because they delivered some fantastic upside surprises. But they're only really having such massive moves because they're parts of some gigantic short squeezes. Too many managers bet against them, and today those bets went very, very wrong. At any given time, there are tons of hedge funds making gigantic bets on individual companies. That's how they try to beat the performance of the averages, which is what the investors pay them for. These days, many of the hedge funds try to merge the top-down macro perspective with a bottoms-up company-specific approach, along with some anecdotal reporting and some suppositions. Sometimes that leads them astray. In this business, you're always supposed to have the wind at your back, and right now, a lot of hedge funds believe that the wind is blowing toward a recession, which means retail is particularly vulnerable. But they clearly got ahead of themselves. Just look at Lowe's versus Home Depot. No, it's a bitter rivalry. We know that. A number of hedge fund managers decided to take a paired position here. That's what they call it. They went long Home Depot and the short Lowe's. This kind of trade is a way to bet on the comparative performance of companies in any given industry. Honestly, it made sense. If you look at the last quarter, Lowe's was wanting. And if you listen to the very good Home Depot call from yesterday, it was easy to believe that they must be taking tons of market share from their main competitor. When Lowe's reported this morning and shot the lights out with strength across every aisle and every geography, that pair's trade was blown. Traders know that discipline trumps conviction. That's a rule. If a trade goes against you, you have to get out, which in this case means covering your short positions at any price. And that's how the stock surged up 10% today. Disciplined short sellers bought back stock to close out their positions and take the loss, and it catapulted the thing into the stratosphere. Target has a different set of circumstances. There was a twofold case against these guys. The bears argued that Target couldn't compete with Amazon and Walmart because it didn't have the scale. And they argued Target would be hurt by the tariffs because it imports so much from China. As a Target shopper, I had suspicions that it would be a terrific quarter, which is why I included Target in my WATCH acronym of dominant retailers: Walmart, Amazon, Target, Costco, and Home Depot. The new stores and the small formats are fantastic. The China reliance much overblown, and their shipped SHIPT same-day delivery system is superior to almost everything. And those were enough to blow away any of the concerns. The results were spectacular here. The stock caught fire. Target was a totally wayward short that was dead on arrival. So the covering of that short began way before the opening this morning, and that's how you got such an amazing run. Oh, and all the macro-oriented managers who bet against these stocks because of the yield curve now look like dopes. They thought we were facing headwinds. But really, this economy's got a strong tailwind, and there are other reasons for an inverted yield curve. Finally, there's Nvidia, the semiconductor company. Here's a company that had a series of subpar quarters. Every time they told us their new products were either too early for their time, like the chips that enable ray tracing, or they were in the thick of the data center, which Wall Street panicked about last year, and you just couldn't see the results that they thought they would get. But when Nvidia reported this time, they told a very different story. Ray tracing has arrived. Data center is strong. Companies' artificial intelligence chips are the hottest pieces of silicon out there. Nvidia was a real good short at 280. But it became a nightmare short at 140, 160, and now it's at 171. I think it's got more room to run, maybe much more room. Remember, defeated short sellers are great fuel for exaggerated moves. I don't like to bet against the shorts. That's a fool's game in itself, as they often know more than we do. But when a short is crowded and wrong, you can rack up some enormous gains, which is exactly what we saw in Lowe's, Target, and Nvidia. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.